Well, hello there. I'm Josh Sparks, and I'll be taking over today's podcast. Our purpose is to connect people with their assets, which includes helping some of the world's largest brands navigate life on the public markets. As part of this, we also collaborate with some of the most celebrated advisors and intermediaries in our industry. In this episode, I'm delighted to have Simon Olsen from Deloitte join us in the studio. Simon and his team recently published a report called Resetting Expectations, which provides a deep dive into IPO market trends for 2024 and beyond. Simply put, it's a really interesting bit of thought leadership on an important topic. So I'm looking forward to sitting down with Simon and getting him to take us through the report and hear about his key takeaways. So let's get into it. Based on the research, I'm so obviously delighted to have you in. And I guess really to start off with, if you could just give us a bit about yourself and Deloitte and your background and where you sort of fit in that advisory space, working with clients would probably be helpful for our listeners.
Yeah, perfect. So Simon Olsen, partner in our equity capital markets team in London at Deloitte. I've been doing this for 24 years. My first IPO was 2002. Served my 24 years at Deloitte, 21 of those now have been in capital markets. It's been a lot of fun. It's seen me travel all over the world. But it's been really rewarding and great to have taken many really good companies to the markets. A bit about us as a firm. So in Deloitte, we have 100 odd equity capital markets specialists. We do a variety of things for clients. So sometimes we are in more of a test mode, which is where we are often the auditor and we're providing assurance or audit type services for those businesses as they come through to listing. So verifying what's in documents, signing off opinions on financials and pro formas, things like that. That's half our revenue. The other half is where we actually are in help mode with businesses. So we go in and help management through an IPO or other equity capital markets transaction. That's everything from right up front, involvement in readiness, working out what they need to do, when they need to do it, who needs to do it, and then helping them right from preparing to the IPO through to actually completing the IPO. In terms of markets, London obviously very dominant for us. We've worked on over 75% of London main market IPOs in the last 5 years. Many of the household names you'd recognise, Cab Payments last year, Ithaca Energy and Haleon the year before, and then 2021. Many more, the likes of Deliveroo, Oxford Nanopore, Pension B, Wise, amongst others. But it's not just London for us. We also do listings into the US. We have a dedicated team of SEC professionals. And in fact, Deloitte has done IPOs out of London onto 24 different global exchanges in the last 5 years. So we're very multidisciplined.
Oh, fantastic. So that's really useful. And I think what I'm just keen very quickly to understand as well is if you could tell us briefly how about this report came about. So you mentioned it's been going for about 8 years or so, but I'm curious to know, when you set out, do you have a target in mind? Do you have kind of an agenda or themes that you're looking to explore? Or do you let the information around the market kind of lead you? Like, how does that process work?
Yes, we've been doing this report every 6 months for about 8 years, as you say. And what we try and do is provide a bit more of an in-depth analysis aimed primarily at either boards or company executives contemplating an IPO or other capital markets transaction, or potentially also the shareholders of those businesses. Think maybe private equity shareholders or founders that own the businesses. We, agenda-wise, we very much go on what are the emerging themes. We have some standard things we look at as well, some fairly standard analysis. But I find businesses and business people can quite readily get hold of data on IPOs. That tends to come out very quickly. What we try and do is provide a bit more thought about it, and sometimes actually just a bit more practical advice. Yeah. I think a lot of what Deloitte does is bring practical solutions to companies trying to do transactions.
Yeah, no, that's fantastic. I think one thing that I liked from the off reading the report is it's entitled Resetting Expectations, okay, which I think is really pertinent to the current narrative surrounding the markets. It's not going to shock anyone to hear that obviously IPO markets in particular have been, let's say, quiet, which is probably an understatement. And you explore a couple of factors that you think contribute to this within the report. Obviously, the macroeconomic and geopolitical events of 2023 have had a kind of rolling on effect to various other things, such as PE in particular, as you mentioned. And combine this with the expectation off the back of well, I say post-COVID, but it was during COVID as well, and that sort of valuation bubble, it's not really a wonder the markets have struggled. I'm just curious though, what's your overall thoughts on where we are now off the back of what has been a turbulent, I say couple of years, but I mean, we're probably talking 5 years really, aren't we? So where do you think we are currently?
Yeah, very interesting question. So I think we're going to see the IPO markets reopen in 2025, and I think we'll see a very good year for IPOs in 2025. There remain potential headwinds. As you well know, there are a lot of elections going on this year. If there are some unexpected outcomes from that, that could cause some turbulence going into 2025. And also we could have surprise events, particularly I think geopolitically, but also on the macroeconomic side, which could cause turbulence. But as we look at that today, we're seeing 2025 as the big return of IPOs. I think 2024 we'll see an improved situation over 2023, but it will be muted for 2 reasons primarily actually. One, there is a lot of election activity globally this year, including of course the UK and the US, and even for companies not directly involved in those, you get the ripple effect across the market. So for a lot of people contemplating IPO, they're just going to let that pass, and then they're going to look to 2025 to come to market. But it will be a better year, 24, than 23 was. I think there are a lot of factors contributing to this. It's actually quite a lot going on, which is quite exciting as a capital markets participant. So you have the macroeconomics definitely improving. We've seen the cost of living crisis, we've seen high interest rates, high inflation. That seems to be coming under control. There's less concern around recession, both domestically and in other major geographies. So that's coming to play as people gain confidence on the macroeconomics. From a geopolitical situation, I wouldn't describe it necessarily as stable, but there's less uncertainty than there was, and the events that are going on in the world now are effectively priced in and dealt with. We then look at pent-up demand. As you rightly said, there's been very little IPO activity really since the outbreak of the events in Ukraine in early 2022. So we've seen 2 very quiet years. There's a big pipeline now to come, and that is partly fueled by private equity, where we see a lot of long hold periods now. We see a lot of funds needing to do exit. When we talk to private equity, they acknowledge there needs to be a lot of exits, and we expect quite a few of those to come through into the capital markets. I think the other factor that you did touch on rightly is valuation. So valuations in any markets, be they public or private, have come down a lot since 2021. It obviously varies a bit by sector, but I think people have now come to be realistic on what their valuations are and have reset. And obviously, if you're in a public market already and you're listed, your valuations reset immediately. That's the nature of being in a public market. I think for people contemplating IPO, we saw people still clinging on to valuations they were getting in private rounds in 2020, 21. Those valuations have reset, I think, or increasingly are resetting, and we're going to see people coming to market. So we're reasonably confident for 25, and certainly what we see in terms of pipeline and indeed work we're doing now, building up towards that, does support that thesis.
Yeah, it's interesting. Something I often think about is, everyone, let's say people who aren't as positive perhaps about the markets and say, valuation support. Well, no one ever likes their valuation, right? I mean, this is a continuous issue. And at what point do we have to, as you've rightly put at the top of your article, how do we reset those expectations that it's not a depressed or weakened market, it's just the market we're in. And therefore, if you want to go ahead with something and you want to do it now, then you can still find a way to make that work, even if your expectations perhaps were different going into that process. There is, the report is well worth a read, I would say, and we'll make sure we add a link to that by the show notes and various things, people can access it. You do a brilliant interview with Bim Afalami, MP and Economic Secretary to the Treasury, as well as your own insights and research. But I'd like to maybe just go through a couple of the themes and interesting points throughout that report. You cite the Deloitte CFO survey in the report, in which there was a positive mood from CFOs as they kind of went into 2024, whilst there was also an air of caution and uncertainty, as we've already kind of mentioned, with a couple of factors. As we record this now in early April, do you think that positivity has continued? And can you tell us actually a bit more about that survey in particular and that research, how that comes about?
Yeah, sure. So Deloitte has been doing a survey of FTSE 350 CFOs for many years now. It's a quarterly survey We ask the same set of questions every quarter. Sometimes we ask additional questions if there's specific events going on. And really it's aimed at understanding the sentiment and mindset of CFOs as they look forward into the future, and their assessment of where their businesses are going, what strategies they're pursuing, their confidence, whether they're likely to spend money or not, their views on things like cost of debt, cost of equity. So the whole spectrum of events. What that showed us, as you rightly pointed out, in the most recent survey, was growing confidence amongst CFOs. And I think that reflects many of the factors we've just been talking about around the macroeconomics, the geopolitical, and I think a lot of also just seeing improved results in their business. That is, of course, as you said, muted by some caution, and I think people remain cognizant that there are some headwinds potentially, and there could also be turbulence from events. But we have seen that confidence improve.
Okay, well that's good. As I said, I think there's been a bit of a negative look on things for a while, and I think it's important to frame things in a positive way moving forward as we look to kind of get out of this period. You mentioned strategy there and sort of that change in strategy and approach to things. So maybe let's talk about fintech. And in the report you say, fintechs and neobanks continue to challenge and revolutionise the delivery of financial services to consumers globally. I'm keen to hear if you think that's positive, and also then how do you think that will translate potentially to some of those companies going to market around IPO?
Yes, we see disruption in many industries, of course, through technology, and financial services is no exception to that. As I look across the clients we deal with, and indeed more broadly around the globe, we see a lot of very exciting fintech businesses which are in many cases disrupting the industry, but also in many cases actually giving financial inclusion and progression to communities, to countries where that's not possible. If we look in many emerging markets, for example, fintech is now providing mobile money and money transfer capabilities to individuals who did not have access to any form of banking previously. So I think fintech has a very positive social angle as well as financial and business growth angle. When it comes to them coming to market, when we look at these fintechs, a lot of them need capital to grow. And whilst maybe 2 years plus ago that money was quite readily available from private sources, as we know, in the last couple of years private funding has become harder to come by for those fintechs. So many now, when seeking growth capital, could well look to the public markets. And as we see IPO markets reopening, I do expect fintech to feature quite heavily in IPOs as we see them.
Yeah, okay. No, I think it all makes sense if we kind of develop and grow in that direction. And you mentioned, funding and that access to markets, and I suppose something that is topical at the moment is the UK listing rules. Obviously, there's been plenty of discussion surrounding these, and perhaps maybe without getting into the weeds of it, I'm just wondering, just generally speaking, do you think it's a step in the right direction? Do you think it's the right approach? Did something need to happen? I'm curious to hear your thoughts on that.
Yeah, I said personally and as a firm, we're very supportive of all the reforms that are going on in London, the work of CMIT, the work of government, and indeed the work of others. I think when we look at it from a standback position, London has largely been unreformed for the best part of 20 years now. And what's happened, I don't think by any particular intention, but what has happened is we've layered more and more regulation on companies, which has made London potentially unattractive from that axis. We've also seen some unintended consequences from things like pensions regulation, which has actually caused our pension funds to take a lot of liquidity out of the system. We've seen them go down from having 50% investment to UK equities to 4%. That's a huge amount of liquidity coming out, and that's a very unintended consequence of what was at the time well-intended regulation. So it's right that we've stood back and properly taken a look at what we can do to reform London. I think in particular for companies considering IPO, when we look at what's being changed, one would hope that there's greater liquidity for those businesses coming in. There's certainly good appetite from government and others in the city to encourage businesses to list in London versus other international bourses. But I also think the regulatory reforms, whilst not of themselves solely our reason necessarily to come to London, they do make a difference, because what we're seeing is the listing process, certainly for some issuers, becomes easier, or certain quite difficult regulation that no one really understood the point of it, if we really stood back, has been taken away. That's very positive. But once on the market, in particular, the regulatory reforms do make life more competitive for listed companies as compared to other international bourses than maybe it was before. I think in particular the changes around Class 1 transactions are important. They make it much easier for listed companies to execute M&A on the public markets and therefore be more competitive against non-listed bidders when they're in M&A situations. That was always outlined as one of the biggest inhibitors for public companies in M&A. I do think it's important we also tackle some of the issues which frankly have gone untackled for a long time. The executive remuneration, when we look at our position as a global centre of excellence, we need to compare ourselves globally. So I think we're doing the right things in trying to change cultural approach to that.
Yeah, cultural approach is a really key perspective, I think. It's not just, there's so much more nuance to it, right? It's not just kind of a black and white conversation. And as the world becomes larger in a way, and there's more access to global capital and competition, and you mentioned that global competition. And a part of the report that I found very interesting was surrounding the pricing and aftermarket performance, comparing US and UK IPOs. And I think it's fair to say that there's not a glowing outcome for either, perhaps. The narrative, as you mentioned, that kind of high-level look, the UK isn't as bad as perhaps some people make it out to be. I'm curious if in an already uncertain global market, is there more risk with looking at the US compared to UK? And obviously you work in both markets, but I mean, how do you compare the two?
Yeah, thank you. I think it's really good actually that we're having a debate on this properly, because for too long we've seen too many businesses just default to the US because they get a higher valuation, or at least they perceive they're going to get a higher valuation. One of the biggest benefits I've seen of everything that's happened in the London reforms is actually businesses are now properly assessing where to list. And what I would say to any business is it's really important to look at your own individual circumstances objectively, and through that work out where it is you want to list, or where it is you may want to consider listing. I see too many businesses or people in business who believe headlines in newspapers. I think the British press in particular sometimes can be very negative on this topic, and just default to the US is better. I hear people say, I'm going to go to the US because I'm going to get a higher valuation. I'm going to go to the US because it's a deeper liquidity pool. It really depends on your business, is the answer. There are some businesses for which London will provide a deeper liquidity pool, a much better pool of investors, much better understanding amongst the community in the city, and therefore a much better IPO and a much better liquid market afterwards. There are other businesses for which the US may give that. There are other businesses for which other international bourses may give that. There's no one-size-fits-all answer, and I think one of the real benefits of the national debate is that it stopped people just blanket believing the myths they see in the headlines. So I'd say to any business, really make sure you look at this in your own individual context, and that's one of the main things we draw out in our report actually, is the need for that.
Yeah,
that
absolutely.
Individually.
It is different horses for different courses, right? And as you say, it's not one size fits all.
Yeah, and I think we sometimes forget how successful London still is.
Agreed.
If you read the papers, you'd be inclined maybe to think London is a disaster. We're still one of the biggest financial centres in the world. We're the biggest financial centre in Europe. There's plenty of liquidity here. So there's trillions of pounds worth of liquidity.
Yeah. So what do you think needs to happen for that narrative to change? Is it as simple as saying, let's get a couple of big fishes away, let's see some big IPOs go away and be successful in the UK, and that will change everything? Or do you think perhaps there's a bit more to it than that?
I mean, I think the return of the IPO markets will help, to be honest.
Yeah, any IPO,
Trying to do all of this in the midst of what globally has been a very difficult 2 years for IPOs is unhelpful, because people say, well, there's less IPOs at the moment. We see more companies leaving the markets than joining. But that's the same everywhere in the world. It's just been a depressed IPO market. So the return of IPOs will help, and I think will give us a lot of good precedent to be talking about. But I think more broadly, I would characterise as there are a number of things that we have done and that are short-term wins. So things like regulatory reform has been done, in my experience actually, relatively quickly in this country. We've actually moved swiftly in the context of how long it can often take for these things to do. We've moved quite swiftly to reform regulation. Things like the British ISA that's now up for consultation. Again, we moved fairly quickly on that, and that looks encouraging in terms of getting retail investors to put money into British stocks. But there are other things that are a longer game. Some of the cultural change we talked about, so changing attitudes towards remuneration, changing investor strategies to put more into UK equities, having a better ecosystem in industries such as life sciences to see businesses from seeding or early stage, we're actually very successful, but then supporting them through their life cycle and then supporting them onto the market in London. We need to grow that ecosystem. These things are a longer game. There are no overnight fixes to them. But the good thing is we've identified this now and we're doing something about it.
Yeah, no, I completely agree, and I think that's positive. And I'd like to sort of finish on a positive note. As I said, I like the approach your report takes. It's not doom and gloom. You mentioned the British press and their perhaps ease to go down a certain path. But on a positive note, as we look forward, what do you think the short to medium term holds for the markets? Is there anything on the horizon that you think we can be positive about? Do you think that will just naturally happen off the back of hopefully things settling down a little bit? Or are we still in a window of unrest that means that there's cautious optimism that needs to be had?
I'm optimistic. As I said, there are potential headwinds, but overall I'm very optimistic, and I think we're going to see a good 2025, and I think for London in particular we will see some good IPOs. We'll see some companies of real scale coming in to the market. There's some I'm aware of that could well go into the FTSE 25 on IPO. But I think also we'll see a good number of companies in the the mid caps coming through to the market as well. So I think we'll see a good pipeline of IPOs coming through in 2025 onto London, which will be a very welcome boost to the city and to the country, and frankly to those who work in it.
Absolutely. Well, I think that's a good place to finish on. Simon, thank you so much for your time. We'll make sure that we make a note of where people can access the report, which I thoroughly recommend having a quick read of. And once again, thanks for joining us.
Thank you.
Fantastic. And that's a wrap. If you would like to contact either myself or Simon, or find out more about Deloitte, I'll leave some information and links in the description of this episode about how you can do this. I'll also make sure to leave a link for you to download the Resetting Expectations report, which is well worth a read. If you found this conversation useful, don't forget that you can subscribe to this podcast on whatever platform you're listening to us on. That way you won't miss an upload. Thanks again for listening. Bye for now.